Right, welcome back, everyone. There's no doubt that the coronavirus crisis has brought a watershed moment for asset managers and institutional investors. Content and connecting with clients became more important than ever before. But I guess in a world that's saturated with news, stories, and analysis, how do investment marketers cut through the noise, and what does the future have in store? To talk us through this, I'm delighted to introduce Simone Weaver, who's head of content at Savvy Investor. Having previously worked at M&G, Russell Investments, and NatWest Markets, Simone is an expert in the creation and distribution of investment content. Simone, thanks a lot for taking the time to join us today. And with that, I will pass the screen to you.
Great, thanks, Ben. And hello, everyone. Welcome to the Content That Converts session. So we've not got too much time today, and I'm going to try and focus on three core things. The first is around which content type is best for engaging those institutional investors. The second is around helping you maximize ROI, because I know we're constantly trying to prove it to those senior leaders. And finally, I'm going to give you some top tips and best practices that we at Savvy Investor have come up with in order to help make sure that you generate more leads and secure that conversion. But before I do, it feels important to tell you, about Savvy Investor and why I'm here qualified to talk about this topic. So I'll give you a little brief intro. We are essentially a content aggregation platform specializing in investment white papers and thought leadership. We've got nearly 50,000 members, primarily asset owners, asset managers, and investment consultants. 9,000 pieces of content are uploaded every single year by our ex-industry content team. So including myself as an ex-investment marketer, we've also got ex-portfolio managers and analysts, which means that we can really make sure that we're finding the right and the best sort of content through our daily curation. And our members download roughly 30,000 pieces of content every month. So this really does mean that we've got access to a wealth of unique data, and we're able to provide deep content intelligence around the habits, preferences, and influencing factors specific to institutional investors. And that's what we're here to share with you today. So before I do all of that, what I'm really keen to figure out is, what's the status quo? Where are we today? What does it look like and how does it feel? Well, if I were to describe the content landscape of today, I think of it as a big, busy city. It's exciting, it's diverse, there's tons of variety, loads of content options to choose from. But like a big city, it's pretty overcrowded, easy to get lost, hard to find things when you're looking for them. It's littered with poor quality content because there's so much of it, and it's polluted by fake news and ultra fake news. Good content, I like to think of as a bus, right? You wait ages for one to come, and then when it does, maybe you get 3 in a row. When I was an investment marketer, I was constantly on the hunt for the best topic and something that was really going to resonate. And by the time we went live, a lot of the time, a few too many times anyway, I was faced with a competitor who'd already gone and said it, or within a couple of days, everyone was saying it. So what can we do about the fact that this is our landscape, and how do we cut through the noise? Well, technology, digitalization, and social media is really what has redefined the content landscape immeasurably. And that's why we've all got this content fatigue. There's so much around. But the thing about that is that it has fundamentally changed 3 core things about content consumers. It's changed our habits, our preferences, and our expectations. So what do I mean by this? Well, our habits are when and where we consume. What time of day? Is it on your commute? Are you doing it at home or mainly at work? And what about the way you consume? Do you prefer to watch or listen or scroll or scan? And also, how are you finding content? Do you use Twitter mainly to get your latest news and aggregation sites to find something when you really need it? Or do you mainly just get your content via email when it's sent to you? And then all those habits form your preferences for the content that you consume. Which format do you prefer? Do you prefer web articles or PDFs? Or do you prefer to watch videos instead? And what about the style? These days, because there's so much content out there, formality has sort of dropped off a little bit, and things are much more casual these days. Do you like that, or would you prefer it to be more formal? And what about the approach? Do you prefer something that's an update, or do you want it to be thought-provoking? And then finally, all these combined really affect the expectations that people have for the way that brands should be providing and distributing content. Should it be only via social media, or does it need to be across a complex suite of channels? And what about the volume and the type of content? Is daily too much? Is monthly not enough? And then finally, that hot topic that's just really been growing and growing in importance over the last couple of years is personalization. What are your expectations for the targeting of content, given that we're constantly bombarded with irrelevant content? And what about segmentation as well? So that's a lot for investment marketers to contend with. And what I want to do is I want to caveat this, because there's loads of advice out there on content marketing best practices. But the trouble is the institutional investment audience have very unique habits, preferences, and expectations. I'm sure you'd all agree. And so whilst there are fantastic content marketing strategies that you can lift and shift, if you do that, you are at risk of not meeting the expectations of our core target institutional investor audience. And anyway, those habits and preferences change, don't they, across age, job role, seniority, sector. So what is best for the institutional investor audience? And how do you truly resonate with quality prospects against this backdrop? Well, we did a survey of our membership base to give investment marketers some really specific and useful data. We wanted to find out the best ways to engage, influence, and nurture your audience. But to avoid providing yet another survey, we've mapped our results with the data from our platform. And we've also spent a lot of time talking with our content team to figure out some practical advice and top tips to enhance your marketing strategies, deliver ROI, and help you really achieve results. So let's dig in then. We did this survey, as I said, to figure out which content type is best. Because I don't know about you, but a lot of questions I used to ask were around this exact question. So, are white papers dead? Are blogs the new black? Is video essential? Is it bad that we don't have enough infographics? Do we need a podcast? Well, look, the answer isn't simple, but the main thing is that a well-rounded content strategy with a varied mix of content types is absolutely the right thing. But there are some content types that will be more superior when it comes to engagement, lead conversion, and ROI for institutional investors. So in the following slides, we've examined our survey results, and here are our findings. So before I do that though, I'm keen to figure out what you guys here in the audience think. So a poll is now going to pop up on your screen, and once you've answered, the results will hang around. And tell me, please, which content type do you think is best for engagement? Let's look at video, white paper, blog, podcast, webinar, or in-depth report. It'd be really interesting to see your results. But without further ado, our survey says, when we asked which content type you found the most useful and which content type will most likely affect your view of the quality of an asset management firm, we found that white papers and in-depth reports were by far the best for content engagement, with videos and podcasts right down at the very bottom. So these results really go against the popular belief that attention spans are shortening. That we're all under immense pressure to make content shorter, pithier, high level, get it out fast. But this suggests to us that institutional investors are actually the opposite. They are willing to dedicate time and energy to engaging with thought-provoking content when it's in depth. So for some, this might come as a surprise, especially given how popular and in-demand podcasts and videos are. But to take it back to my original point, that's general population marketing strategies and performance. Remember that. For Insti investors, clearly engagement within multimedia just isn't as strong. So maybe consider that the next time someone asks you to produce a video, which we all know tend to be the more expensive, and ask yourself, is that going to deliver on the ROI that you need right now? So looking much closer at the data then, which content type do institutional investors find most useful? As we can see here, white papers and in-depth reports were the most popular. Blogs were firmly around the middle here with 10%, while videos and podcasts were last, ranking at 26 and 27%, considering it as least useful. One thing that I found really interesting is that these days, blogs and web articles have almost become the end destination for a lot of content. And that has been in sacrifice of an insights library, for example, and PDFs. But clearly, from an institutional investor perspective, white papers and in-depth reports are really a format that they much prefer over blogs. So what about influencing your view of the quality of an asset management firm? So we asked, and the results are extremely similar to usefulness, except investment reports on the Investment Outlook were considered far more influential, roughly around, let's have a look, 6% more influential than useful, whereas videos were really considered not influential at all. Again, blogs were really along the same sort of lines. These results are broadly supported by our platform data as well. The platform really gets a huge amount, much more engagement anyway for white papers and in-depth than when we provide links to blogs. So again, just to reiterate, this shows investors are influenced by content that causes them to think deeply, challenges their mindset, and provides them with new information, or perhaps takes them on a journey to see things differently, as often is the case with a white paper. So this makes us think that when it comes to the sales funnel, clearly white papers work right the way through. So I know, we're all aware that content is your shop window, but the survey suggests that it is much more than that. Traditionally, content has been thought of only really top of funnel sort of stuff. Anything from conversion down to loyalty, it is typically the responsibility of your sales and relationship managers. They're on the phones, they're going to meetings, they're sending personalized emails. But we disagree with that and think that this survey shows white papers and in-depth reports work right the way through the funnel. In the minds of the institutional investor, the quality of your content influences the view of their quality of your firm, which makes it really important around the conversion and the invest stages of the sales funnel. So, and as I mentioned, the Savvy data supports this as well. So when planning your next campaign or drafting, perhaps redrafting what success looks like to you, it's worth considering this. And look, don't get me wrong, it's undeniable that multimedia is popular and it's really valuable, especially for performance on a social media channel. But when you're targeting institutional investors for ROI or for lead conversion, maybe you need to consider that engagement will be less. And here we go. So blogs, as we can see from our survey, they work around awareness and they work around loyalty, but they don't carry much conversion or sales power. So now let's get into the Savvy insight. We know what people want, we know what's going to affect the influence potential and the quality, but how do you create content that really delivers results and ROI? So I'm not going to go through every single one of these because I've designed this as a bit of a checklist for you when you're embarking on your next content piece or campaign. But to bring out the real highlights here, I've divided it into 3 sections. The first is planning your content or your campaign. The second is the content itself. And finally, it's distribution. And these are the 3 most important elements that you should always be thinking about. The first thing I want to talk about is that your content really needs to be client first. And by the way, the reason why I know all these things is because at Savvy, we tend to do content quality audits from our clients. And these are the things that come up all the time as to what is getting the most out of the engagement that we want. So back to the point, client first. Think about the questions that your clients are asking. If you don't have access to that sort of database, get in touch with your sales guys and your relationship managers and find out what it is that the clients want to know about, rather than what your business wants to talk about. Champion the client. And if you can't do that, then figure out what topics your experts can write about deeply, because remember, in-depth is really important. The next thing I want to flag here is the fact that there's no need to have a sales pitch here. Objectivity and impartiality is really key. Don't slip in a subtle sales pitch at the end of your white paper, because the more objective something is, the more likely that you'll convince someone absent of the sales pitch. If they didn't sign up for the sales pitch, don't make them go under one. So the next thing is to think about is CTAs, your call to actions, and your journey mapping. Our survey found that 41% of institutional investors proactively visit asset manager sites. So make sure your content is super easy to find. Make sure you've got an insights library, really good synonym searching, and dates on all your content. It's really important that the customer journey keeps you on site. It's not just call to actions to pick up the phone or buy a product, but call to actions can cover things like read the next article or download this PDF. So when we get to the content itself, of course, we need to start considering the look, the feel, and the tone. If you don't have a front page on your 20-page white paper, maybe now's the time to consider it. But one thing that we find when we do these content quality audits is a lot of content, for some reason, doesn't have an executive summary. The best way to think about this is, what about your elevator pitch? What are the things the 3 key highlights that you would cover if you only had 6 floors to convince someone to hire you? That's what your executive summary should be. And look, let's get real. You're not writing a novel. You don't need to wait for the plot twist at the end. Put all your juicy data and your key findings at the beginning so that people keep on reading and they want to read. It's a brilliant tool for brand awareness and for improving your brand reputation as well. So another thing that's really important is scannability. There is this well-known finding that when you're consuming content digitally, that you follow an F pattern. So make sure that your content is optimized for this. And by that, I mean employ navigational tools such as headings, subtitles, bullets, pull-out quotes. These will really help to keep your audience engaged throughout that longer form content. And look, visual aids. I know I don't need to tell you that a picture tells 1,000 words, but so does a chart, a table, a diagram. Use them. Make sure that your content looks aesthetically appeasing. So finally, when we think about distribution, one of our major findings from the survey was that 90% of our audience prefer PDFs to web articles. Let me say that again, 90%. So if you are not doing PDFs for most of your long form content, start now. Another thing is that 78% of our survey were frequently finding asset management content via email. So if you're not using email as a distribution channel, it's really important to do so. In fact, make sure that your campaign is multi-channel. Don't limit yourself only to one. If you distribute effectively, the channels end up doing the heavy lifting rather than you. And don't forget that sales and relationship managers are also a distribution channel. So arm them with some slides or, again, an executive summary and some key points so that they can sell it for you too. And finally, a really big takeaway is that 68% of our survey proactively visit content platforms that aggregate investment content. So make sure that you're syndicating your content there too, whether it's paid or organic. And you can also do that by doing a press release as well. But aim to strive as a part of your success metric to get some sort of third-party pickup. So before you embark on your next piece, ask yourself, have you considered all of these elements? And finally, what we wanted to do is consider some of the top upcoming content trends for the future state of investment marketing content in 2020 and beyond. The first forecast that we've got is that due to the content overload after COVID, many of us have, content and news fatigue, or at least I do. The world is saturated in content, as Ben said at the beginning, and the pressure is on to differentiate a firm's content offering. This will likely force a shift from lightweight or reactive content much more towards the quality content and stuff that's effectively positioned with meaningful takeaways, something that makes your time worthwhile when it comes to reading it. Content that focuses on quality, depth, and problem solving will shine. After all, that is how Google defines quality, and they will rank you accordingly. So think about that for your SEO too. Focus your attention on building authority on topics that you can write about with depth and with quality. Original research and digital execution as well will all become really key parts of this differentiation process. As our survey showed, the dominant medium bearing influence upon the institutional investor is and will continue to be longer form in-depth white papers. The second thing is shelf life for mileage. ROI is now going to be more important than ever. Content volumes increased drastically due to COVID, and there's no surprise there. On Savvy, we found that there was a 50% rise in outlooks versus 2019. But as 2020 progresses and the viral epidemic itself becomes more manageable, we expect that less content will relate to that broad macroeconomic picture. Instead, we think that it's more likely to focus on evergreen topics and thematic topics. But not just because of that, we think that COVID and the recession may see marketing budgets tighten too. So ROI is going to become even more important. And when it comes to ROI and tighter budgets, your best bet is to put money behind evergreen or pillar content. Ideally, content that remains relevant after 6 months or more, or that you can recycle and update. Content like this is perfect for a longer term drip feed campaign or as an anchor for future campaigns. So start seeing what you can do on that side of things. And finally, our last forecast is around the fact that we expect data to deepen, both the usage of it and the data that's available. Data and dashboards and metrics are commonplace nowadays, albeit investment marketers have been a little slow to pick it up. Content producers who are using metrics to define what they talk about and to help inform their strategy rather than just measure it will succeed. This is going to help define your category authority and help you to drop dead weight. Bold investment marketers will look, frankly, at whether or not a strategy or a topic is performing, and they'll decide to get rid of it, or at least we recommend that you do. But also, we expect that the data itself is going to become a lot more complex. Vanity metrics like click-through rates mean less these days. So we expect to see an increased use of improved metrics such as dwell time, cursor movement, and scroll percentage. But we also think that content will change, just like what I mentioned before around that F pattern and making content scannable. We think that maybe content will start to adapt to take on neuro-linguistic programming techniques, machine learning, and trends that have come from big data as well around the content consumption patterns that we're seeing. Every layer of additional data added will serve to define and enhance the customer's level of engagement and their experience. So that's really all we've covered today, but I want to give you with 5 key takeaways. If you do nothing else, do this. So as I said, avoid the sales pitch. Take a client-first approach. What are their questions? What are their habits? What are their preferences? And make sure that you think of that before embarking on your next content piece. Remember, objectivity and impartiality is best. Consider whether it's time for a review. Is your content's approach, tone of voice, presentation, and distribution the best it could be? Remember that 78% of our survey are finding their content via email, so make sure you're doing that. The third thing here is around CX, so the customer experience and the user journeys. Ensure you've got the best sort of navigational cues possible, whether that's on-site or within your content, and choose a client-friendly format. Make things easy to find as well. 90% prefer PDFs over web pages. So if you are providing a PDF, make sure it's really easy to find because often you can miss it when it's on the sidebar. The fourth thing is it really pays to promote. So syndicate, syndicate, syndicate. 68% of our survey visit content platforms. And finally, get data driven. Feed your strategy and streamline where possible to provide ROI. Data really allows your strategy to be dynamic, and it also allows you to improve and find efficiencies and synergies where possible. So thanks very much. I just want to remind you that if you want to reach out for any of us, you can get in touch by reaching out to Stuart Blake, and I've just provided the email there. And are there any questions?
Great, thank you very much, Sidonie. While the questions are coming in, just one that I wanted to ask out of interest. What are the most popular sort of downloaded content topics that you have on Savvy Investor?
Yeah, well, during COVID especially, market outlooks and ESG were really, really hot, but I think that's probably to be expected. We do produce a document called the Investment Content Quarterly, which you can find, actually I've provided it for you to download. And within that, we draft all of our data and do our downloads so that you can figure out quarter by quarter which the most popular topics are, as well as information on which part of our membership base follows which topics most. So check that out.
Great, cool. Okay, so yeah, getting into the questions that have come through. Looking at the content itself, which companies would you say produce the best content?
Oh, well, I mean, I couldn't really say that here, but what I can say is that there definitely are some providers really doing amazingly well, and they will continue to perform at the top of their level. And often they're employing many of these topics, best practices that I've mentioned. But we do actually provide rankings of company content. However, that tends to be a paid service. But we offer content quality audits as well, which is where we rate your company, if you want, against a selection of competitors, and we can provide recommendations for quality improvement and such like.
Great. Someone's mentioned you didn't really speak much about Savvy's business model, so just curious as to how that works.
Yeah, so, well, thanks for asking. I mean, asset management companies partner with us largely for a monthly fee where we'll promote and then we'll distribute their content to a targeted audience base. And then we provide engagement metrics and lead generation reports. We're currently partnering with most of the world's top 20 asset management firms, as well as a couple of small ones and service providers. At the moment, I think we've got between 30 and 40 partners. And then the partnerships that we offer come in a selection of tiers, depending on how many pieces of content you want and that sort of stuff. But there is a media pack as well that you can check it out with.
Great, thanks. And I think the media pack is hosted on the resources through the On24
exactly.
platform, so easily downloaded. A couple of questions in relation to the results of the survey that you have. Firstly, given that podcasts and videos were voted so low, should companies just stop doing them entirely?
It's a tricky one, because if your content, if your video series and your podcast is doing super well, of course, absolutely don't stop. But I think what these survey results have showed is that for that specific institutional lead gen that you're trying to achieve, perhaps embarking on starting up a new series may not be the best way. But also remember that videos and podcasts work well, not necessarily for conversion, but they're probably working really well for your brand reputation and for your brand awareness. So I don't think you should stop them entirely, but I think it's just about having a well-rounded strategy and also figuring out where is best to put your money behind.
Sure. And yeah, this other question about the survey showed that the vast majority of people, 90%, prefer PDFs over web pages. Why do you think that is?
The PDF has been around for so long, and back in the day, it used to be the only way that you would receive content. And I thought it was striking that that really hasn't changed, despite the fact that the way that companies are hosting content has. And in fact, the demand for it has risen even more. And I think this really leads back to our habits. So despite the fact that we're consuming content on the go quite a lot of the time, we're being bombarded with content. A PDF allows you to download, it allows you to save it for another time or attach it to an email. And it's quite old school, and there's something quite comforting in that as well. But also remember that it can often be quite difficult to read on the screen. And when you're forced to do that all the time, I don't know, I like to print something out and read it over breakfast on a Sunday morning, even if it is work related. And I think what these results show is that that's what our institutional investors prefer. Another interesting thing to note as well is that a big portion of the institutional investor base are using desktops for their screening, for their viewing, and a PDF can often, when zoomed up big, and if you have improved and employed things like great scannability, you've artworked it really nicely, and you've got visuals, it can look a lot nicer and it's a bit easier to navigate versus a website that has, perhaps bigger sidebars or things like that. So often the reading experience is better because it's optimized for reading, whereas a website is optimized for a user experience in a different sort of way. But equally, at the end of the day, a PDF is designed for long form content. That's what it's for. And so I think that's why.
Great, fantastic. Well, with that, we've perfectly come to the end of the session. So, yeah, I really want to thank you for taking the time to this day. Agree that content fatigue is real. So being able to stand out from the crowd, I think, is super important right now. And I think a lot of really valuable advice that you've shared. And obviously, yeah, your contact details are available, resources to download through the On24 platform as well. So encourage people to download those and get in touch. But thanks again, Ximini. Really appreciate it.
Thank you.
Thanks. Bye-bye.